Hello, my name is August Brunsman. I'm a realtor working in Central Ohio with Berkshire Hathaway Home Services Professional Realty. I made this highlight sequence to give you an overview of the home buying process in Central Ohio. Let's go. We're going to cover all the basic elements of home buying here in Central Ohio. We'll go over what your relationship with your agent is like, how you'll pay for the house, finding the right house, all the parts of making an offer, how the closing works, your down payment, and your first mortgage payment. In Central Ohio, most buyer's agents get paid on commission. That commission is usually funded by the transaction. You should explicitly talk with your agent about their commission before you start looking for houses. Buyer's agents used to say things like that they were working for free. That is almost never true, and you should ask them about it. In Ohio, real estate agents can treat you like a client or they can treat you like a customer. Ask them what y'all are doing. If you're a client, they have to look out for your best interests. If you're a customer, they basically just owe you honesty. A buyer's representation agreement will make it clear how your agent's getting paid and if you are a client or a customer. Be sure to tell your agent as soon as you get uncomfortable. If they don't address your concern, tell them you're not happy and you want to stop working together. Most agents will just cut their losses and walk away. If they aren't willing to do that, let them know that you want to speak to their broker. One of the best parts of buying a house is that you can largely do it with other people's money. If you don't have a lender you like yet, talk to your agent for suggestions. Agents aren't allowed to get kickbacks from lenders, so they're likely to base their recommendations on how reliable and easy to work with the lender is. Before you can make an offer on a house, you're going to need to have proof of funds. Normally, this is a pre-approval letter from the lender. The lender will issue this a day or two after you make their mortgage application. Alternatively, if you aren't working with a lender, you'll need to have a bank or brokerage statement showing you have sufficient access to funds. Searching for houses to look at is usually the fun part. I've got a couple different online apps that I give to my clients. I know other agents do too. It's always a good idea to let your agent know what you're looking for, just in case they happen to hear about a house before it gets online. This is something to get prepared for. This is probably the biggest purchase of your life, and you'll spend maybe half an hour inside before you make your decision. You've got the listing photos, and if the listing agent is good, you've got a video and a 3D tour. I recommend going to at least 3 or 4 showings before you make an offer. Houses always come with a residential property disclosure. That disclosure is no substitute for your own inspection. Houses built before 1978 will come with a lead paint disclosure, and condos will come with a bunch of documents. Talk to your realtor about them in detail. Houses move fast in the Central Ohio market. You want to focus on active and coming soon listings. Ones that are contingent or in contract are slated to be purchased by someone else already. Maybe 10% of those fall through, but I recommend focusing your attention on the actives and coming soons. Once you find a house you like, it's time to have your agent write up a purchase offer. The contract has several moving parts: price, contingencies, funding, inspection, earnest money, fixtures, home warranty, appraisal, closing date, duration of offer, and possession, and we're just getting started. Let's go. Your purchase offer is just an offer. The seller can agree to it, but often the seller will make a counteroffer. Sometimes with a higher price, but frequently with tweaks to one or more of the terms that we're covering. Their counteroffer has all of its own terms, but many of them will probably be based on your offer. An offer is accepted once you and the seller have signed it. Once the offer is accepted, you're set to be in contract, and the deal will move forward unless and until one side fails to perform something they said they would do in the contract, or one of the contingencies falls through. So the price is how much money you're offering the seller for their house. Keep in mind that if you're using a lender, the lender is going to have to be okay with the price that you offer. Your lender will tell you how much you can borrow in general early in the process, but they're also going to appraise this particular house, at least most of the time they are. Because houses have lots of parts, people depend on them for shelter, and they're expensive, the real estate contract has lots of contingencies. These are go, no-go points in the contract. Talk with your agent about the details, but the two biggest are finance and inspection. The vast majority of people use a loan to help them buy a house. Lenders do a lot of due diligence to make sure that they are making a good investment with you on this house. If the lender isn't satisfied as they learn more about you and about the house, the contract's going to fall apart. Houses have lots of parts, and people depend on them for shelter. I highly recommend hiring a home inspector to inspect any house that you are in contract to buy. The inspection will probably cost a little bit more than $500. It'll take an hour or two. You should get a written report in a day or two. If the inspection report turns up major issues that would cause you to not want to pay what you've offered for the house that you're in contract on, your agent can prepare a request to remedy, which they'll send to the seller. You can ask for things to be repaired or for reduction in the price. If you and the seller can't come to an agreement, the deal ends. Earnest money is money that you give to your agent's broker to hold while the house is in contract. If you just walk away from the deal for no good reason, the money goes to the seller. If the deal ends because one of the contingencies fell through, you most likely get your money back. If everything goes through to contract, the money gets applied to your down payment at closing. A home warranty is different from homeowner's insurance. Homeowner's insurance protects you against unexpected disasters like a tornado. A home warranty protects you from normal wear and tear. So if your hot water heater stops working, they'll fix it for you. Sellers often include them to sweeten the deal. You can always buy your own. They're usually about $500 a year. Every purchase offer has a duration, how long the seller has to say yes to your offer. Once that window closes, they can't sign your offer. They can make a counter offer, which extends the deadline. It's not uncommon for a counter to come back a day later after the duration of your offer is ended. The purchase offer specifies the closing deadline, when the deal needs to close by. That is, when the seller gets paid and when you become the owner of the property. The date in the contract is a deadline, and you can close earlier than that if it works out. Most of the time, though, the closing is on the deadline. Possession is when you actually get to move into the property. It's not uncommon for a seller to need a week or two to move out. Before writing up your offer, your agent should have called the listing agent to find out when the seller wanted to delay possession to. If the agents didn't talk beforehand, the seller might respond to your offer with a counter, extending possession. If you use a lender, they're going to use the house you buy as collateral. They want to know that it's worth what you're paying for it so that they can get their money back if you don't pay your mortgage bills. Most likely, they'll have an appraiser come out to the house and give a professional opinion of the value of the house. If the appraiser's opinion of value is greater than or equal to the price you're offering for the house, the deal will proceed. If it's below the price you're offering, then either you need to come up with more cash to bring to closing or the seller needs to lower the price. It's a whole new negotiation inside the deal. Closing is when the seller gets their money and you become the owner of the house. For now, this has to be done in person, but often enough the sellers do their part at the title agency separately from the buyers. That said, so-called roundtable closings, where everyone is sitting around the same table, are slowly coming back into fashion. The closing will be handled by either a title agency or a lawyer. It's much more common for a title agency to do it. These are businesses that specialize in handling all the paperwork and money around closing real estate transactions. The seller normally picks the title company. Ask your agent if they know its reputation. Title insurance is issued by the title company that handles your transaction. This insurance protects you in case it turns out some party not involved in your deal shows up later and claims to have an ownership interest in your house. Closing costs are costs involved in doing all the paperwork around the sale of a house. There are too many to go into in this video. You can ask your agent for an example ALTA statement if you want to know what to expect. A purchase offer can propose that the seller pay some of the buyer's closing costs. A down payment is the money you wire transfer to the title agency on the day of the closing. It's going to come out of your bank account, and it's usually very important to the lender that none of it was borrowed. You'll work with the lender beforehand to get an idea of how much it'll be. 3 days before closing, they'll let you know exactly how much to wire. Rent is usually paid in advance. Mortgage payments are paid in arrears. The upshot of this is that you're renting and moving out at basically the same time that you close on the new home. You'll probably have a month with no rent payment and no mortgage payment. Don't get too happy though, your lender's charging interest to you the whole time. The first out-of-pocket money you'll normally spend while buying a house is on the inspection a few days after going into contract, usually a little more than $500. The next out-of-pocket amount, about the same time, is the earnest money, usually a couple $1,000s. After that, on the day of closing, it's your down payment. Then a month after that, your mortgage payments usually start.